music is so sick. Danny, did you produce it?
No, it's this is a StreamYard special, I'm pretty sure.
Those lines.
There he is. I didn't even want to show that.
I like the beats.
We're figuring it out here. I don't know why it's doing that. Oh, there's Ryan. All right, guys, let's hop into it. I got to pause the music before it rips another round through. Welcome to another run of the 0x live stream. Joined today, we've got Felix from Forward Guidance. Glad to have you on, sir. James Christopher from the Telegram, known individual. Ryan Cashflows Connor, and Westy from the data team. How are we all doing today, guys?
We're still alive and we're not crashing out.
Yeah, we're here. We're doing a community outreach for our brethren, pulling in people like James from the Telegram and giving them some followers, giving them some clout. What's up, James? You're here for the second 0xResearch pod now. That's impressive.
Second time. It's very, very exciting. Happy to be here.
First time pre-recorded, second time live. We love it. Felix, glad to have you on. We don't usually get to pull you in. The macro and the degen and the deep research pieces don't often collide that frequently, but the last time we had you on the pod, I know we tried to get a little bit into your on-chain enjoyments, if you want to call it that. Would love to do that today as well, but we also want some of your macro takes. And I think it's probably a great idea to start off on markets. Actually, a ton of stuff happened yesterday. I was just listening actually to the Forward Guidance app you guys just dropped, you and Tyler. Would love to just dive in, get your thoughts on the market and maybe some of the recent, crash out news the other day. And then let's just dive into it. Like, how are people feeling?
So Tyler and I talked about this in the roundup, but I think the fact that the government is just going to keep on spending and running high fiscal deficits can basically be the catalyst for breaking up the previous bromance that was Elon and Trump. It just goes to show how ingrained these dynamics are. That was my biggest takeaway from this whole thing. It's just that you just cannot fight the beast that is Congress trying to be reelected and throwing money at their constituents. And the fact is, no matter how much you bang the drum about fiscal austerity and all these things, there's midterms that need to be won. There's taxes that need to be cut. And so here we are. It basically broke them up. And I think that just goes to show how ingrained these dynamics are. And it really, really revitalizes my conviction in owning assets that can both be a tailwind and a hedge to that dynamic. So I've been talking a lot about how important it is to focus on the fiscal side of things as opposed to the monetary, which is what we've been used to for the past 2 decades of just looking at, what's Powell going to say at whatever press conference. And I mean, you just look at the past 5 years, like we are, especially the past 3 years or so, we're 3 years into having rates be quite a bit above the zero lower bound. And I feel like there's a lot of detractors that thought that would cause a recession, that would cause, speculative assets like Bitcoin to do badly. And it's just the complete opposite. And I think because that is so much driven by this fiscal side of things. And that you hear this idea of fiscal dominance, and I don't think we're quite there. For me, the definition of that is when the fiscal side of things completely leads the charge and the Fed and the monetary policy side of things is there just to basically smoothen out that process and also to basically monetize any excess issuance that is required to lead fiscal policy. But we're getting closer and closer to that point. Obviously, Powell is still the head of the Fed, but that's going to end in 2026, and whoever replaces him is going to be somebody who's blessed by Trump, and I think that'll be some meaningful catalyst further towards this idea of fiscal dominance. So, yeah, when I just look through the noise, when I set aside all the tariff stuff, all of these different things, to me, all the core components are still there and accelerating that make me bullish on monetary hedges. So still very excited about Bitcoin, still very excited about gold, still very excited about US equities, bearish anything that is a fixed rate asset like treasury bonds. I think we're just going to continue into this world of cyclically and secularly higher inflation. So yeah, I don't know. It feels like there's just, there's narratives that pull us in one way or the other every single week. But when you just look at the core buckets of what's there and what's driving things, it's all the same thing. So there's no real reason for me to change my mind. Obviously, we're heading into the summer here, and we could talk a bit about that, I'm sure, in terms of just how choppy and illiquid summers are typically for crypto. And I think it's totally possible that we just mess around for a little while, drive people insane, and accelerates mental illness. But overall, when I look at the big picture, it's just like, it's the same old thing, and it's accelerating, really. Yeah, so that's where I'm at.
Felix, do you think, like, how do you quantify traditional markets and kind of like Trump exhaustion, where the marginal headline and the marginal escalation in tariffs is having less and less of an effect? And do you think we get to a point where, like, we're just totally looking past that kind of stuff?
Yeah, it's so funny because, like, you track through the headlines basically since Liberation Day, and it's just been every week some sort of marginal in the right direction. At the same time that we saw Trump come out and say, "Oh, we're going to potentially add 50% tariffs on Europe," and that quickly got revised, and the market didn't even really take it seriously that time. So obviously that's been the driving factor of this whole like taco thing, which I don't know, feels like we're probably now opening up the risk of that being taken. Weighting it too heavily, this idea of just Trump always took chickens out. So I don't know. It's like with anything in markets, is that when you see the same thing hit the tape every single time it hits the tape, it has a lower impact on it, and that can be Trump, tariff headlines. It can be earnings releases, pretty much anything, So I feel like it's just the way markets anticipate and price in forward changes. And for some reason, it just feels like a lot of people get too stuck up in where things are in the present day, and this like static thinking I kind of complain about that too many people have. And you just have to look at like what's likely next as opposed to where it stands today, but also balancing that with this like diminishing returns of pricing in those, if that makes sense.
Shout out to Christoph with the worst mic I've ever heard in my life. Oh my god.
Is that bad?
You might have to send him a pod mic now.
I told him it was
Yeah.
okay beforehand.
Are you using wired headphones from 2011? Like, what's going on?
Well, first I had AirPod Pros, and then Danny told me they sucked. So now I'm on my computer.
They were worse.
Oh yeah, and you have the Lenovo.
I'm on an Asus Vivo book now. Times are tough, man. Can't afford it.
That's fair.
He really needs
Yeah.
the markets
Good
to go
Chris.
up higher to afford new gear, I think. Well, I guess maybe we start diving into the more crypto-centric views as part of the recent market activity. I think really one of the big ones here is Circle, the IPO listing at what, like opening at 31, and
Could I jump in? Can we actually go back to macro for a moment there?
Sure.
I have a question for Felix. I thought two interesting things from what you just said. One is you didn't really talk about the Trump-Elon breakup. Does that matter to macro at all in terms of like Trump's ability to get things done? Because he has a very tech-centric cabinet, and there's like a potentially like, I don't know, maybe I'm reading too much in between the tea leaves, but like he has a very Elon-influenced cabinet, and I think that there's potentially some risk of infighting there. And then two, from a macro perspective, I didn't hear a mention of AI in terms of like what that does to the macro backdrop, like either near term or long term. I'm wondering if you have any thoughts there.
Before I answer both of those, I'll just say that I have no real good unique view on these, but I will say just off the cuff, I think it's a good flag on the first part. I think it's really easy to look at these headlines of this tech oligarchy breakup with the Trump administration and extrapolate it out into what does that mean for JD Vance sitting at the middle of those two and trying to have to pick a side, and the Mark Andreessens of the world, the Chamas of the world, all these people that have sort of been married between the two. Yeah, it's a decent risk. I don't know really how it trickles out, to be honest with you.
You don't think the market cares? Like you don't think that they're thinking like, I don't know. I'm just wondering if you think that people who are managing macro risk are actually thinking about that thing.
Yeah, I mean, it's a decent one, but we've also seen a complete reversal already of it. I mean, maybe part of that is the jobs report today that was decent compared to the ADP was pretty weak, and people got off base there and are a little too bearish on the economy and the labor market. So maybe it's part of that, but it also feels like a big reversal when people just stop for a second and think what are the actual mechanical impacts? And sure, maybe it creates a few more headwinds around some of the more tech-centric policy decisions that they make. But I think overall, you have to weigh that against these fiscal impulse dynamics that I mentioned that I just think are so much more powerful. I've been thinking a lot about what it means to be in this economic regime that we're in now, where there's a lot of debt, and now that debt is paying a pretty significant yield on it. Now it's paying 4.5%, and that's happening at the same time that people's mortgages are sitting at 2.5% in a 30-year fixed rate mortgage. That is, you could jack rates the Fed could jack rates to 10%, and what would that actually do to mortgages? It wouldn't change anything, and then they would actually get a higher interest payment on their yield. So I just feel like these dynamics just overweigh so many other things, and it's why you have the passive flows constantly going into markets, you have the buybacks of every equity company. So it feels like every time we get one of these little shocks, I think it's the reason why you see these V recoveries where you have the catalyst that brings it lower, and then it's like a beach ball underwater, because eventually those other flows I mentioned just have to take it up and come forth. So yeah, I think it's a decent risk, but I just don't feel like it overpowers those more powerful flows anyway. And on the second question about AI, I feel like some other people here probably have better takes on AI than I am. I'm definitely a tourist, but I feel like, there's the other day I was working in a spreadsheet, and there were some charts I needed to make, 10 of them. And typically, if I just did that manually, it would have taken me a couple hours. And instead, there's the Gemini integration into Google Sheets now. And I just put in one prompt, and it was done in 30 seconds. And just that little tidbit in terms of extrapolating that across the world in terms of productivity, it's going to improve things a lot. Will it improve, to the point where we see the big, spicy takes of the Anthropic CEO talking about unemployment doubling in the next few years? Yeah, maybe that's the case, but I just have no edge in forecasting that. But I don't know. I've talked a lot. I'd love to hear what other people's takes are on the impact of AI on the economy in the world.
Yeah, my personal belief, and this is someone who used to do macro, no longer does, and now just mostly focuses on AI and crypto, is that in 2022, I think a lot of macro people just got everything wrong. 2022 into 23, you used to see these lead lag models pretty popular on at least retail, in retail macro circles, and they were popular in professional macro circles as well, and they all stopped working. So if you're going to have a model that predicted the change in unemployment, which would also signal a recession because unemployment spikes in a recession, I think if you had 50 metrics that would predict that on a lead lag basis, 49 of them said that unemployment should have ripped in the back half of 23. It did not, probably the first half of 24. It did not. And so what caused that? I think you have a very obvious inflection in the fourth quarter of 2023, which was AI capex spend, and just the Keynesian animal spirits around this technology. You saw it in construction spending in the US that went parabolic. That was mostly driven by data centers. And you have the largest components of the S&P 500, all who generate either high tens of billions or low hundreds of billions in free cash flow per year, the most cash flowing generating entities in the history of capitalism, all spending as much as they can on capex in the United States, right? And that filters into local economies and creates job growth. So you have this like weird, you actually have this weird trend now in U3 unemployment that it just doesn't look like it does historically, or it's taking longer to like kind of take off than it has. You have this weird trend in PMI that, the chart hasn't looked that way for 15 or so years. And like, I'm willing, as someone who just knows like the high level data, I'm willing to say that that's all the animal spirits coming from AI investment out of the largest companies in the United States that have to put cash to work there. So I don't know. I personally believe that like that's the biggest force in macro. Like you mentioned earlier, high rates happened. Everyone thought the economy couldn't handle it. I think that was almost true until AI, right? Like because like now you have ROIs potentially higher, and that hurdle rate of interest rate expense matters a lot less. So I don't know. I'm of the opinion that like the cycle keeps going. Like I understand all the flow stuff and fiscal spending and stuff, but I even think that you could get a decline in fiscal spending and it wouldn't matter because the mega caps are just gonna pick that up, and all the startup and venture funding is going to keep flowing into the economy to capture this AI opportunity, which I believe all these biggest players view as existential, right? So they have to spend that cash.
Yeah, those are such great points. I feel like that's definitely a huge chunk of it. I would say it's that compared with just a inaccurate analysis, because you rewind back to 2021 and it's like the Fed can't, I remember there was like, Jamie Dimon is saying Fed funds might go to 2.5%, and everybody was like, no way, that's ridiculous. Like the economy can't handle that. And I think a lot of it is for sure the AI capex spend and productivity gains, but also I think just an incorrect analysis of what happens when you have corporates that have termed out their debt on the long end for many, many years, and households doing that on their household balance sheets in terms of mortgages, in terms of the fact that the flow through of interest rate hikes does not affect the economy like it used to. So I feel like it's a combination of both. I think that's a really good point that I probably underweight that side of things. But the two together, I think just makes the entire economy less cyclical and more just either secular exponential for sure.
I remember looking at the 2-year rate in the back half of 21 and thinking to myself, this is never going to get off zero. Like I literally like said that to myself, and that was my expectation. And then when it went to 2.5, or maybe it was 2, yeah, I was certain that the economy couldn't handle it. I think everyone was, and look where we are.
So I think something that's interesting, Ben Eifert had a really good tweet thread last week of, to your point, Ryan, of like, yeah, the capex spend is totally real, but I think people are extrapolating and kind of being a little too doomerism on productivity gains, right? Like we have yet to hear on an earnings call like a CEO of a big corporate coming out and saying, "Hey, we're jamming $5 billion into buying productivity tools, and we're going to fire 10% of our workforce as a result of this." And I'm not saying it's not going to happen, but I think it's probably a bit further off than people think, and it's going to be predominantly capex driven for the next couple of years before we start to see like mass layoffs and like real implementation of this stuff.
I will say anecdotally, I have a lot of family members and their friends that are in the like graduating college, like new to the workforce class. And like I'm hearing a lot of stories of the job market for them being like horrible due to a mix of like just the way things are currently, but also like hearing that AI is the reason that they're hiring less for those like junior entry level positions. And so I think, yeah, anecdotally, it's already being felt, but on the macro, you're not really seeing it quite yet.
Do you guys see Circle just hit an all-time high?
Yeah, what are we at?
118.
108? Oh, 118. Oh, wow. I'm delayed, I guess.
100x long or short right now? What do you say, Felix?
Oh my god.
I got my finger on the green button.
That's like, I don't know. I haven't looked at what the float is of the Circle IPO, but it's just that, yeah, these things are crazy when they first launch, and you have that compared with just like the lack of cash flowing companies in crypto. Maybe Ryan Cashflow Connors can elaborate a bit on it, but yeah, it just feels like it's just like the valuation is not the concern right now, just because of just the lack of options for crypto exposure, sort of. So it's like, I have no idea where this thing can go.
Yeah, Ryan, you shared some info on like a model the other day in an internal chat. I guess I'm curious, like if you have a deeper take there, but that's the feeling I get is what Felix said. Like there are very limited options, and it's just like if you want to allocate to this, that's like one of the very few public options to do so right now.
Yeah, I think that Circle and IBIT are all market structure. I mean, all. I don't want to be all is strong, but I think that there are two forces here that are somewhat contradictory, but are both true. Is that one, hedge fund managers and RIAs, they want crypto exposure, so they're going toward the things that are most familiar, which is why Bitcoin did well, ETH did poorly, and why Circle is doing well, because they're stablecoin adjacent and people understand stablecoins and TradFi. But I also think that like a huge part of their story is market structure. There are so few options that if you want a pure play, which every hedge fund manager or RIA wants a pure play, like you don't want to buy JP Morgan to get stablecoin exposure, even though they're going to make money from stablecoins one day. You want to buy Circle because it's easy to explain to a client, and you can more easily like manage that direct exposure rather than within a conglomerate exposure. So yeah, I think that there's a large market structure story here. So like first to market on these products like matters, right? Like Solana getting an ETF therefore matters because market structure matters. It's just like kind of the state that we're in right now. What would happen to Circle if Bitfinex were, able to IPO? Like, I don't think we're ever going to know, but yeah, it's all market structure, I think.
Yeah, what other way do you have to get exposure to stablecoins directly? Like every other way is completely indirect. I guess Coinbase might be a decent proxy given, their proximity to Circle. But yeah, this is like the purest way to get exposure to stablecoins. Anyone who was at DAS, I mean, I wasn't there, but it was all I heard from takeaways of the conference was every single person there was bullish on stablecoins and their growth and potential. You have Chamath every week on All In mentioning stablecoins in some way, shape, or form. It's very clearly hit the TradFi mainstream, if you will, where everyone, I think, has come to the conclusions that stablecoins are good. They have product market fit. They're growing fast. And so, yeah, it's like, okay, how do you get exposure to that? It's literally just the Circle IPO. There's no other pure way.
It begs the question. Go ahead, James.
No, please.
Okay, I was going to say it begs the question of, like you mentioned, both Ryans here. The market structure question I think is interesting because it's, let's say Circle wasn't the only option. I mean, if we look out a few years from now, I mean, how do we expect things to unfold? I mean, do we think Circle is going to be a big winner here, or are we looking at other things now and forecasting? These guys are eventually going to go public. This token is eventually going to come to market, and that's where I would really want to like put my cards on the table.
Mm-hmm. Yeah, the big question for me is about. So it feels like this double-edged sword now, where one side is going to have to be a loser. So the reason I say that has to do with where does the interest go for these stablecoins. So if the Genius Act goes like it's proposed right now, and there won't be interest allowed on these stablecoins, that means 100% net interest margin for these stablecoin issuers. That is very profitable for them. Like you think about money market funds, they they will clip fees, but overall, most of that interest gets passed on to the owners of the money market funds. So you have this situation where either you have something like, obviously Circle, part of it is that if you own on Coinbase, you get part of that yield. But just speaking in general terms, it's either these stablecoin issuers get 100% of the net interest margin, and the consumers get zero yield. In which case, if we're talking about that TradFi money that wants to be in like money market funds or the money market funds 2.0, which is how I see stablecoins, either they have to sacrifice not getting any yield as opposed to getting 4.5% in money market funds, or on the other side of things is the stablecoin issuers get to keep that 100% net interest margin and make a shit ton of money. And so I feel like the biggest question at hand is, where does that end up? And yeah, I mean, if it gets passed in Congress and these big stablecoin issuers can't pass on the yield to consumers, that's going to be great for the companies, but it means that adoption from money market funds will probably not exist, because why the hell would they own it if the owners of those stablecoins can't get a yield? It's a weird one. I don't really know where it goes.
So that's kind of like exactly where I was going to go, Felix. Like, if you go down this route of massive TradFi stablecoin adoption and the issuers keeping the interest, I think it's very, very unlikely that names like Citigroup, JP Morgan, B of A are happy to dive deep into this business and support stablecoin rails, but somehow allow this weird niche little company called Circle to own everything. That's the Circle, no pun intended. That's a terrible joke that I can't square. Like, I just don't understand why you would want to bet on this standalone business, to be totally honest. Like, you can price forward-looking NIM very, very well. And if you look at Circle right now, I don't know why you would buy it at the current valuation if you're bullish on stablecoins and its accrual of NIM.
I agree. It's certainly pricey right now. Also,
Yeah.
not non-zero chance that a lot of retail capital is moving it, but I have no inside baseball there. Guys, I got to run, but I'll be back in 30 minutes. Peace, y'all.
See, Ryan.
We'll see you in a bit, Ryan.
Yeah, so I don't know. It feels like somebody's going to win, somebody's going to lose. It feels like it's more likely for the consumer base to lose, assuming the Genius Act gets passed and you can't have interest on these stablecoins. In which case, maybe the runway for Circle is more attractive. But yeah, if you start to get interest-bearing stablecoins, these, like, we can't see the profitability of these other stablecoin issuers like we can with Circle now that they're public. And overall, what you can see in those is that, yeah, the gross margin is entirely just because of the fact that they don't have to pass on these. Well, obviously they do through Coinbase, but you can just extrapolate that and kind of set it aside and just be like, okay, well, the only reason they're like somewhat profitable is because this weird situation where they have 100% net interest margin and the consumer base does not expect yield. But if we go into the direction that like James is talking about, where the JP Morgans and like the Schwabs of the world come in with their like digital money market funds and start passing on yield, suddenly those margins get compressed and these valuations just don't make sense. But again, you have to set that aside against the dynamic that is that it's one of the only options for exposure, and people hit buy. And market structure, if that happens in a situation where the float is super low, which I assume it is, I haven't looked at the numbers, but to see it just whipping around like this, I assume the float is very, very small.
Yeah, I'll tell you right now. So 202 million shares outstanding, 175 million float. It's not terrible.
Actually, yeah, that's decent.
One of the things that's been interesting is I would have thought, given the success of the Circle IPO, that stablecoin protocol governance tokens would perform really well. And to be honest, like, there hasn't been much outperformance of like your makers or Athenas. I've also been seeing a ton of people float Frax thesis recently, given their like ties to like the Genius Act stuff. Like, they're really trying to penetrate like DC in a weird way, and also funds are super underexposed, which I thought was like a super interesting thesis. And that has been like outperforming recently. But ever since the Circle IPO, just absolutely nothing.
Do you guys remember when Fract was going to get a Fed master account?
I do remember that.
Yeah, I mean, it brings up the debate of like these useless governance coins versus actual cash flow occurring to stablecoin issuers, right? Like Ethereum is, I love the project, but the token itself is a tough one in terms of the value flow through into it. And yeah, Maker seems like another one that's a little bit better. I don't know too much about the specifics. Maybe you guys can expand, but yeah, it just feels like the endless issue of the tokenomic structures and the governance coins that just don't have anything that they can claim onto it versus like these actual equity ownerships and stable coins. And it just feels like a continuation of that dynamic of like, these governance coins like may not be the best framework for creating exposure to crypto markets, right? Like I think there's a good fundamental reason why we've seen a lot of people get really excited about like crypto stocks like Robinhood as opposed to the 10th iteration of a random governance coin, right? Like it's just a way better format.
Yeah, we talked about this a lot on the pod. I want to say a few months back, maybe when Kaito was a hot topic, or when that token dropped, and just discussing, there's the endless debate of the token versus the labs entity or the equity or whatever. We have this kind of dual structure that's been very pervasive. Not quite stablecoin specific, but maybe this is worth discussing Morpho in this recent announcement from them. But to that point, I do agree with you to an extent, Felix. Like I think as long as we continue with this structure of there's some labs or other entity equity structure loosely associated with then this token to some, basically, if it's a successful protocol, some cash flow generating business, and then you're choosing to divvy up the revenue between multiple places, it's like you end up with a much less attractive offering and a lot of uncertainty there in terms of, am I always only going to get 25 or 50% of the revenue? Am I going to get 75 or 100% in the future? Do I actually even have any right to that? Like, can they just yank that away at any point? I think that's a big problem. I'm curious. I'm just going to read a quick note here from Morpho, but they mentioned that what they're going to be doing here is Morpho Labs will become a wholly owned subsidiary of the Morpho Association to eliminate perceived conflicts with equity value and ensure that token holders and the contributing entities share the same incentive. It sounds like a good step in the right direction to me. I'm curious your guys' thoughts. Like, should more protocols just be doing this? Like, do away with the conflict with labs, have it all under the token.
Yeah, I mean, initial thoughts are this is fantastic and a step in the right direction. I think it became sort of the norm to have like a foundation labs arm. Like once one person did it, and like no one discounted the token as a result of having that kind of structure. You just saw it pop up again and again. But there was one interesting talk from DBA's recent research day from Felipe at Thea, talking about how liquid token markets right now are broken.
Mm-hmm.
And there's a bunch of different elements to that. One of them definitely being this like equity versus token mismatch, making it really, really hard to invest in the actual tokens because you don't know whether like the cash flow will actually accrue to the token or not. And you don't know whether things will change in the future versus now, given that the foundations and labs have so much control over the supply and can just change things via governance at will. There's also other pieces of like, you need to discount token liquidity versus equity in like a huge way. And so just off the bat, tokens need to be valued at less than equity. I highly recommend people go listen to that talk. But yeah, I mean, the only way you really solve this is through creating new norms and also the market starting to price these things in that like the token should be valued at much less than the equity if there's no value going to that token. And like we're also working on something that should help with this sort of transparency, or rather like creating norms within the industry that these teams should follow, and that the market should price these things based on those sort of elements. So yeah, I think Morpho's doing a fantastic job sort of putting their foot down, putting things in the right direction, and setting an example for other teams going forward, that you don't have to do this. Like, I feel like people felt in the past they had to do this kind of structure because that's what teams do. That's what you do. So having a path that's different, I think, is very, very valuable. And the Morpho team is great, and I'm not surprised that they did this as well. So yeah, I'm happy about it.
Yeah, that Taya video was really, really good. I think the other thing too from this announcement that I really appreciate is lower in the article, they talk about how it's become the norm for when we start to move towards this idea of fee switching for protocols. The assumption is, oh, well, let's like give these out to equity owners as a dividend. And, you know, maybe James can riff on this too, as we bring in the like crypto once again, like it always falls plight to this idea of just like reinventing the mistakes that TradFi has already worked through. And so now we're in this situation where there's like this owner base that is like, well, I want 100% dividend on retained earnings from this company. And when you like, that is just, if you started to ask that against like early stage growth companies, they'd be like, what the hell are you talking about? Like, why would we give out 100% like dividend payout ratio? That's absolutely ridiculous versus reinvesting in the company. So they also mentioned in there about how they want to do away with this notion of just spitting out cash flows to others, because the idea there, like when you think about capital structure and equity structure, the idea is that like when you go through the calculus of deciding your dividend payout ratio, you're making the calculus of, is it more accretive for us to give it to the equity owner, or do we think we can get a higher internal rate of return on it, internally investing it? And this notion of the expectation of giving up all the fees to equity owners and not reinvesting it into the company is just way too far to the other side of the extreme. But it's somewhat valid of a criticism because they've been so burned on the fact that they haven't gotten anything. They've just had governance tokens. So I think the combination of fixing equity structure along with this idea of let's rethink these as actual companies and actually be a bit more pragmatic about our dividend payout ratios, i.e. throwing off fees to equity owners, is a really good thing. Yeah, James, what's your take on that? I'm curious.
I think it's just like kind of obvious, right? Like I think people are done listening to protocols say, well, we're not in control of this, the foundation is, and the foundation saying, well, we're not in control of that, the labs is. And like I feel like people are totally exhausted of that over the last year or two. So yeah, I've got nothing but good things to say about it. I think it's very, very obviously a good thing.
Yeah, I think I'm inclined to agree completely with you here, Felix. I feel like if you collapse this structure that has been pervasive, you remove a lot of the. I think you made the point so well that just like, as maybe a token purchaser today of a lot of these weird structures, that probably you're going to get a small fraction of revenues maybe redirected at the thing at maybe not even now, maybe at some point in the future. And so it makes sense that the thought is, well, if they're going to give me anything, like, buy back the token or just like give it all to me, because we don't, if 75% is going to the labs team, like we don't even know if they're reinvesting it in the protocol. Are they paying themselves fat salaries and just sitting around? Like we have no insight. There's very little transparency, I think, to a lot of these activities today. And so it doesn't surprise me that a lot of the sentiment today around the flows that go to the token are very much just like, pay it out. We want the money for the investment. And I think if you eliminate a lot of that stuff, you get more transparency around what the spending looks like, how we're allocating, what growth strategies look like going forward. And it's all under this one common investment vehicle or token or asset or whatever you want to call it. It can remove a lot of that friction, which is what I see it as today. This is an expression of all that friction.
And Danny, I don't want to jump the gun, but I think it kind of dovetails into this conversation. Like, I think that's probably the number one reason that people are so pissed off about the pump ICO, right? Like this split, like this is it, right? Third biggest ICO of all time, and it's unclear, right? Like even if it gets 25% of the revenue, it's still, to me, that's not enough, right? To come out and raise $1 billion.
Yeah, I think it's a fair point, and I understand, and I'd love your guys' takes here. I understand why teams still operate this way. One, it's good for them, right? They get a kind of a double win here. They have some equity, they have some tokens, they can, you know, the equity gets raised up, they drop the token, they can use the token to incentivize things. Maybe the incentivization of the thing then raises the value of the, you know, the perceived value of the equity. There's a lot of things going on there. But also like the prior regulatory climate, like I'm sure there are still teams who would be scared or very cautious about saying, hey, we're not even going to have equity. Like it's all just the token. You know, I think there's been a few, right? Kaido was one where they're just like, the token is the thing, you know, we're doing the token and like that represents like what we're building here. But you know, it doesn't surprise me that other teams would maybe still be hesitant, but in the new administration, it seems like maybe you can step on the regulatory gray line a little bit more. You know, the SEC is certainly leaning far more openly than they have, you know, in the prior sort of regime. And it seems like it's an opportunity to push those boundaries. And like, you know, if we need to go fully, you know, token operated businesses, basically, now's the time to test that out. And I agree with you, right? The kind of current rumor is that 25% of revenues would go to the token, which is far different than if all of the, you know, they're on track for 500 million plus in annualized revenue this year. So it's a ton of money. And to see 75% of that go to a team and be opaque and transparent like all the other projects of the past, yeah, it would be a big letdown.
Yeah, and I think they would do themselves a service if they were like, we don't need the full roadmap, but give us an idea of like, what are you going to spend it on? Because like, there's a very non-zero probability that they just special dividend out like $500 million to VCs, and like, that's totally fine. I guess they can do it, but I think like some transparency. Are you guys going to buy streamers? Are you going to do contracts? Like, just give the community an idea of like what you think you're going to spend this money on before you raise it. To just take $1 billion is very tough to me.
Yeah, it's like if they went through a traditional route to raise this kind of money, obviously the investors are going to ask that, like, what are you going to do with the money? So the fact, like, ICOs in one of the downfalls, and I'm a big proponent of ICOs. One of the downfalls is just you don't really have to have that much transparency. Like the community will just like, for the most part, fund you, especially if you get enough people, like enough eyeballs on your ICO. Like you're probably going to get the money without having to actually disclose what you're going to do with it. And that was a lot of the issues of the previous ICO era, is people just threw money at anything, and you could just literally have a fake project and rug it. So yeah, I think they should have way more transparency over what they're doing with $1 billion. I strongly agree. And one of the things that I feel like every day frustrates me is that we work in an industry that, like, one of the number one values is transparency. The fact that we're working with blockchains and that everything is available to see, that like we still have such crazy opaqueness when it comes to, you know, teams launching tokens and what they're doing with the money. Like it's pretty absurd. Like we as an industry should be setting a standard way above TradFi of like in real time tracking where money is going, how it's being spent, how much revenue is being driven, what are users doing. Like we should have this all in real time in a much faster pace than TradFi. And the fact we're not doing that like blows my mind and frustrates me a lot.
Yeah, 100%. I'm curious what you guys think about what that does for L1 tokens versus like the applications that sit on top of them that end up being the ones that end up having cash flows and profitability and revenues. And like, it's just, I mean, it feels like every L1 is going through this existential moment of like doing some weird trickery of, not even trickery, maybe that's too exaggerated, but just like trying to jump through every sort of hoop to try to get any sort of value accrual to its like L1 token. Meanwhile, these applications come in, find product market fit, start getting fees like crazy. And then yeah, you start to wonder, okay, pump token versus Solana, right? Like which one is the better hold if, I don't know, most of the activity is just like on pump fun. And, you know, what if they just go off and start their own blockchain, right? Like that's where, what does that do for the L1 token? It just, I don't know, it feels like a huge headwind for them.
James, looked like you had thoughts. I have a lot of thoughts on this topic.
Yeah. I think like first at a high level, like I'm perpetually confused that people in crypto are still obsessed with valuing things on the near term on cash flows. Like it's to me like I think Rev is really cool in terms of showing momentum and directions. I think it tells you very little, if not nothing, about the value of something. Um, but also like if you look at like early stage venture, which is kind of what I think we're all doing here, like no one would look at OpenAI and say like, hey, let's slap a multiple on this thing. What do the cash flows look like in 10 years? What's the immediate term value accrual? I'm not really sure why or if anyone is really accurately modeling this stuff for cash flows and kind of what the obsession is with that. Um, and you even see stuff that like every single time there's a token in a cycle that accrues tons of cash flow, right? I'm thinking of like Sushi Swap in 2020, 2021, right? Everyone had all these amazing DCF models and God, it was going to print so much money, and it just never works out. So I don't know, Westy, what do you think?
I'm glad you brought that up as well. So yeah, I like mostly agree that like in the short term, like right now, if you're looking at REV of the major chains, that doesn't really tell you much because we are like these are still early stage venture bets. But at the same time, when you look in the future, you're optimizing for growth now, but at a certain point, you want that growth to actually capture value. And if you're a blockchain, the way you capture value is people paying to be in the chain, which is REV. So you're optimizing for future REV. Now, there's obviously a debate on whether current REV is a good predictor of future REV, which it's probably not, especially when there's a bunch of meme coin trading. You don't know how long that'll last. Maybe that's here forever. Maybe it's just here for a short time. But you're still optimizing for REV, just in the long run. And so this gets to the questions of like L1 valuations. I think for the most part, L1s and like really a lot of chains as a whole are pretty overvalued. There's a like I think right now they're basically valued on like people dreaming about, okay, smart contracts are going to be really big. What's the probability chance that this takes a certain percentage of market share of that? And so it gets priced in the billions, tens of billions of dollars. The problem is like that sort of worldview is like very much future looking. And so there's no way to actually come back to reality of like, okay, in the future, how much cash flow are these things going to generate? And really what you should be looking for is, again, future REV. And over time, we're going to see the amount of margins that come from REV go down over time. Because right now, a lot of it is like sandwich, like arbitrage, really like inefficient price discovery. It's like a lot of meme coin trading and yeah, like people that have insensitive like buys and also like yeah, just and also yeah, people exploiting that via sandwiching, etc. And so that's going to come down over time. And as a result, like L1s are a very low margin business in the long run. And when you like think terminally of like, okay, let's say we ramp up TPS and like the median fee is like less than a penny because we want as much activity as possible. These things don't make that much money when you like you actually calculate things out. And so yeah, I think L1s are like for the most part overvalued unless they have an enshrined application and that application is generating revenue.
Oh,
speaking of,
fuck, tell us about applications that fit that.
No.
So there's this one called Hyperliquid. It is, boy, you wouldn't believe it. Wesley, I have a question about this.
Yeah.
How? Because I wasn't listening. I'm sorry. I just.
Yeah, you just. What's up?
I was doing. How long is this? Like L1 valuations are. I guess L1 fees are going to go to zero. Like, in what time frame do you say that it's? Is it like a 5-year thing? Is it like a 3-year thing? Is it like a 15-year thing? What are we talking about here?
I mean, in terms of like a per transaction basis, it's probably like a 5-year thing. I think you see basically like the whole thing is you want median fees to go down. You want number of transactions to go way up.
Yeah, that makes sense.
Yeah. So like I think on the next 5 years, you see median fees go way down as there's just like more efficient MEV architecture, more competition, and like apps also like sequencing things and taking a lot of that MEV. like margins will compress. So the median fee goes down, but the hope is that you're the place that everyone congregates, and there's value in having shared state, which I think there is, and that like you become a chain for a bunch of these things. Or again, you have an enshrined application, and that application can have high margins or its own form of revenue. In the case of hyperliquid perps, or like it's a great application, just cash flowing. Yeah.
Do you see anything, like if you look at it from a value fundamental perspective, that you'd be comfortable holding for like 4 or 5 years and just locking it away? Where like we're still in this momentum market where
Yeah.
it's just BTC is the only thing you're comfortable holding and everything else is just a trade.
Yeah, I mean, that's how I view things. Yeah, Bitcoin is like the only thing that I can hold on a 5+ year time horizon and feel comfortable. Everything else is a trade for the most part. And like even looking at that, like let's say we're like right now forming the future Mag 7 of crypto, and that let's like use Solana as an example. Maybe that eventually gets to trillions, right? But in the meantime, it's going to go through waves of like up and down 80%, like down 80% from tops. And so if you can trade it well, you can also compound that. So to me, it makes the most sense to trade everything that isn't Bitcoin. Yeah.
I think you saw this year as well with, well, Felix, he just disappeared, man. He said, fuck you.
I want to.
Sorry, I'm still here. I got to jump in a minute, but I didn't want to interrupt the conversation, but I'm still sort of here.
Yeah, let's cut in the middle here real quick. I think we'll get back to this conversation because I think it's a good topic. But I want to say thanks, Felix, for coming on. Appreciated the macro takes. Loved getting into the details. If you have any last takeaways here on just this valuation piece, or if you're just excited to see it play out, happy to hear it. But then also, Ian, glad to have you on as well, Kairos Research boy. We will pick up the conversation here. Any last words, Felix? Otherwise, we will see you on the Forward Guidance podcast as per usual.
Yeah, no major final thoughts. I think it's just like, I think James brought up a decent point that this obsession with like near-term cash flows just feels like a natural reaction to just how shitty the situation has been the past few years for the token structures that we've had. So I feel like it's a reasonable just reaction into the other side of things. But I feel like now, and this is what I really liked about that Morpho piece, was just this like understanding of, okay, we need to have a bit more pragmatism around like basically like dividend payout ratio of fees. Like how much do we just reinvest in the firm versus give it to equity holders? So yeah, I'm excited about the next iteration of things, because obviously so much of this too has just been so hamstrung by the regulatory situation where it's just been so difficult to create these token structures. So I feel like my high level is just we're in this interesting transition stage where a lot of these useless governance coins that were created the last few years just because out of necessity will, you know, we're still seeing them go basically down only. And I think that's just a natural progression of markets. Meanwhile, you know, things like Circle and then other projects like Hyperliquid that show actual like product market fit and good tokenomics structures start to decouple from those. And I'm really excited for the token structures that are going to be probably worked on right now by devs and coming out in like a year and a half. I think they're going to be really, really great. So yeah, I feel like things are going in the right direction. We're just like in this weird transition stage out of like the terrible SEC regulatory situation we had and where we're headed from here. And the token structures just don't really exist yet, except for like a few exceptions. So yeah, I'm optimistic. Yeah, don't want to fall plight to financial nihilism and go punch shitcoins all the time. I think good things are coming overall.
Love it. Thanks for coming on. And
All right.
hopefully we'll have you on again sometime soon.
Definitely. Love to do this. See you guys.
Actually, this would have been relevant for Felix as well, but I wanted to ask.
You were too late. Sorry.
What the blow up risk for these new vehicles are. You know what I mean? Like Metaplan. I don't understand what the, like, I understand that eventually there might be a cascading issue, but I just don't understand why exactly it is, which is what I wanted to ask him. If there's any bank or anybody in like traditional finance on this call, that would also be beneficial, but we can see.
Yeah, if only we had someone like that who could, you know, just give us some valuable insights.
What do we want to talk about, Bach?
I don't understand why, like, what's the, can you explain to me, like, you're speaking to a very stupid child,
Yeah.
what like the MicroStrategy bad scenario end game is, but
Yeah.
like really dumb it down for me.
Sure. So like think of a very traditional company that wants to borrow money in capital markets, right? So Apple goes out there and they float unsecured general corporate debt, right? So maybe they'll issue at like, I don't know, X percentage. They'll repay it in 7 years and they make regular coupon payments. Super, super vanilla. Now think of a convertible bond as an unsecured debt instrument that pays a very, very low coupon, basically effectively zero. But the difference is convertible bond, like its name, can be converted into equity, right? So at a certain conversion price and a conversion ratio, and these are all different for each type of convert, it's convertible into common equity. So you basically have a piece of straight debt with a call option embedded in it, right? So you can price this with like Black-Scholes and tons of traditional models. So that's kind of like super high level how a convert works, right? So MicroStrategy has obviously found a ton of buyers for that debt, mostly within the convertible arbitrage community. And just to keep it super, super basic, the way that those types of trades work, a convert arb fund will long the debt and then short the common equity, and they'll delta hedge that on a regular basis, right? So there's a natural buyer for the paper there. In terms of like the blow up risk for MicroStrategy, I agree with most people that there's not really like a blow up risk where he sells all of his Bitcoin, right? Like that's not really a thing. So you have two situations with a convertible debt instrument. One, either the equity trades really, really well and it converts to equity, right? And then the paper is retired and MicroStrategy doesn't need to pay anything back. Or you have the other scenario where the convert's busted and the equity, this is kind of the more interesting piece, right? Where the equity is trading very poorly. You assume the MNAV of MicroStrategy is also trading pretty poorly. So you get to an end scenario, and I don't know, I can pull it up on a computer in a second, like what the MicroStrategy debt distribution is. Like I'm pretty sure the first convert doesn't come due until like 2028, something like that. Let me see. It's loading. Whatever, doesn't matter. 2028 or 2029. So assume the convert's busted and you can't repay it. What does seller do to repay that? So one, he could sell Bitcoin to do it, but more likely he's probably just going to try to issue more debt or more preferred equity or something to do that, right? So I don't think there's like a blow up risk in that. You're not going to wake up one day and get like the whale alert that Michael Saylor's selling, 10,000 Bitcoin to repay something. But I think more on like a microstructure basis, and what's more interesting to me is not asking the question when Michael Saylor is going to sell Bitcoin, but more what's a situation that causes him to buy less Bitcoin and that effect on markets. Like that buying pressure, like you don't need to sell something for the market to collapse. You can also just buy less, right?
Yeah.
And that's something that I think is worth thinking about.
Yeah, to me, it's less about like these strategy and strategy clones blowing up and needing to sell, like being forced sellers. It's that these are the biggest idiosyncratic buyers of Bitcoin and also like some of the largest tokens in the market. And if all of a sudden there's a reason why they're buying less, then that has a cascading effect on prices.
Yeah, I think people underestimate how much he's bought. I should probably pull this up. There's this website called Sailor Tracker. I'm sure everybody's familiar with it, but I think he bought 20 bill in the second half of.
They own about half as much as all the BTC ETFs combined. Last I checked, like 2 days ago.
Yeah, I mean it's ridiculous. But what about? This is not related to this as much, but what do we think about the entire like all of the now copycat vehicles popping up, and if that is kind of a toppy signal? I don't like saying this is a top signal, but to me that feels a bit much,
Like one of the questions, I mean, yes, it's certainly different. It's certainly, I think, accompanied by a lot of additional froth in the market from other things that we're seeing. And I think it's just because there's so much excitement. Like we finally have like the tailwinds in the industry. But one of the things I'm wondering is like, and James, you might know this, but like, how do all of these new treasury companies that are popping up, how do they actually like pay their employees? Like, how do they make any money at all? Like, their whole business is predicated on just being able to like issue debt and then buy tokens. And like, to my understanding, like, it's like, at least with MicroStrategy, they had like this, you know, bit of a dinosaur analytics business that kind of like lived for a while, and now like it's still there. Like, you know, they have like a bit of ARR there, but like all these new companies, like they have no actual business for the most part. So curious if anyone knows how like they're making any money, if like that's the entire goal as well of these companies. It's like, how are they paying these people? And also like, did any of you guys listen to the Lightspeed pod that Jack did with the DeFi Development Corp investor
Yes.
relations guy, I believe? Yeah, it was a good pod. I think people should go and listen to that. But yeah, I mean, just the first question, I guess, around like, how do these people make money? How do these companies make money outside of purely this business? James, do you know?
I mean, you don't have to, right? Is the simple answer. Like, you can, in the same way that Tether can run their company with 25 people. Like, you can spin up an SPV tomorrow. You can raise like 10 million bucks of equity. That's going to pay your overhead and your health insurance for like forever. And that's also one thing. Like MicroStrategy's business doesn't make money anymore. Like they're done, right? Like their business, whatever residual income is there. So like the last 12 months, their pre-tax income has been -6 billion, right? So like they're not an operating company that's selling SaaS to people anymore. Like that notion is kind of gone. So yeah, like you can perpetually raise equity and pay 2 or 3 employees to, you know, manage that business. You don't need an operating business to do that.
So it's really just more reflective of like this appetite from whoever these private investors are handing out, you know, 50 million, 100 million, 500 million, $1 billion checks to pick your favorite company who's going to go and bid BTC with it.
Yeah, and I think one of the most interesting things that came from the Lightspeed podcast is like there eventually will be a normalization of these SPVs trading at like different NAV premiums, right? Like if you have, let's say 2 years from now, 5 Solana, you know, buy and hold treasury companies, and one's trading at like a 10 MNAV and one's trading at like a 4. I think those kind of things are obviously going to get very hairy for people. And there's eventually, you know, I've long thought there's going to be activist investors that are going to come into these companies and try to break these things, right? And force like an orderly liquidation for them. This is like an activist's dream type of transaction, right? On a maybe MicroStrategy is too big at this point, but if you have a company with a few billion of BTC on its balance sheet, and you can get a toe hold position in there, and take them to court or get a proxy war going on, I think you can force them to liquidate if they're at a big enough NAV premium.
So like in the longer term, you eventually just kind of see consolidation amongst these types of companies, and also if any sort of like levered style ETF product, like, you know, 3x leverage BTC ETF or anything like that, for any other token like hits the market, do you think the demand for these types of vehicles is also like greatly diminished?
Yeah, and there's a whole hedge fund strategy of, it's called closed end fund activism, right? So closed end funds can trade at a discount or a premium to NAV, and I'd argue like MicroStrategy is just a closed end fund that's trading at a huge premium. And you know, hedge funds can get together and build a position and short BTC on the side as a hedge, and you know, force shareholder votes and get these companies to liquidate themselves if the premium gets too out of whack.
One thing I also want to say is, James, you mentioned that the amount of Bitcoin in the ETFs has doubled that of these treasury companies. I think the important piece is that since Q4 of last year, the treasury companies have been heavily outpacing ETF buyers, especially Q1. There's basically like no ETF flows and treasury companies bought a shit ton of Bitcoin.
Yeah.
We had a chart of that on our analyst hour call yesterday, actually. I sent it to Danny. I don't know. It's a grainy screenshot. Maybe I'll send it in the 0xResearch chat, but that might be too much alpha.
It's I think they had outflows yesterday, and they also had significant outflows last week from the BTC ETFs. It was like 350 mil last week on one day. I can't remember what day. And then yesterday it was 280 mil outflows. So not great. It is in a weird spot where there's clearly a lot of adoption across. Like the Uber guy yesterday was talking about how they might implement stablecoins into the Uber app. But also on the other end, you have like random companies spinning up to do treasury strategies, which is always like a little scary, as if the price isn't going up as well, makes you a little nervous.
And I think with a lot of this stuff, like I really don't like to overthink it, right? Like a lot of times people are convinced that like these treasury companies have like created some new kind of like financial alchemy. And I really hate to use the grayscale analogy because it's just, to me, it feels a little bit lazy. But like there were people in 2020, like whose names will remain anonymous, that were spinning up their own trust vehicles to do the same grayscale trade, right? Like we actually have just seen this before, right? I mean, it's obviously very different. It's a very different flavor. But I remember back then all of the lenders saying, hey, this is like this very exotic way to juice returns and create revenue. I don't know. I'm not going to say it's a top or anything like that because I think that's a fool's game. But yeah, I don't know. At the end of this, I don't see Michael Saylor winning and him being, the richest person on the planet and just continues to issue converts. But who knows? Maybe I'm wrong.
Here's that graphic Westy was asking about, and you can see the uptick in the public companies flows relative to the ETFs, and that flipping that happened between Q3 24 and then Q4 24 and then Q1 of this year, where, like Westy mentioned, ETFs very little and a ton from these treasury companies. And the ETFs picked back up Q2, but these companies have been chugging.
It's also important to know that these Bitcoin flows, the ETF ones, a lot of them are delta neutral and they're shorting somewhere else. So it's like not really net overall, whereas the treasury companies are net. So when it comes to like, again, like they're the largest idiosyncratic buyers of Bitcoin. And if that starts to drop off in a meaningful way, it's no bueno, the Bitcoin price.
Do you guys have that graphic? I'm going to try to find it. I think it came out 2 days ago. I think the Bloomberg guy retweeted it. It was like the breakout of ETF holders by like investor type. And it was actually pretty good. I think the largest holder was actually RIAs, which is really good to see. There was obviously a ton of like RV hedge funds there, but there was a decent amount of RIAs there, which is good. I don't have it offhand, but
yeah, let me pull that up. Eric Balchunas shared this info.
Yeah, exactly.
And I think you're making a great point here. Yeah. He mentioned previously that they were nowhere near, holy cannoli, they were nowhere near the top of this list, and then just recently like have kind of jumped up the ranks. So it is an interesting point to make that like, yeah, Advisor has surged up the list now, number one by a mile. They make up 20% of total assets, but he said likely to rise another 35-40% as more adoption comes. I don't know. We have broader thoughts there. Like, I mean, is the trend just continuing to trend? Could it really be that simple?
I mean, are they just going to keep getting dumber and dumber with treasury companies? Like, are we just going to continue going out the risk curve?
Well, I mean, I think if you spoke to like, people with the Bitcoin vision would say like, okay, now it's in the ETFs and like now investment advisors are telling their clients to buy it. And, now funds are going to start making it part of their, sample typical options for like 401ks and other different, investment vehicles that people are typically, investing through, and maybe they're not even managing their own money. Like, is this really just part of that process? Like we're just, it's achieved this like past the transition point of becoming a large enough and like meaningful enough macro asset, and then now that, you know, as it is at this point of the adoption curve where you see these numbers that Balchunas brings out, and you know, there's sort of some unstoppable thing here. It's not quite the same as like when gold kind of had its big move, you know, maybe a decade or so or two ago, around like ETF, you know, inflows and people buying that. But I don't know. I just wonder if there's like this broader trend that's just like kind of primed to play out now that the vehicles are out there and people are thinking this is a great place to park money.
I mean, for the most part, yeah. Like this is a ginormous macro trend, and like over like a long enough time horizon, like Bitcoin is going up. Like I don't know what else to say other than that. Yeah, that's all I got.
I like the Jeff Park take of the 60-40 portfolio is dead, and he's like, you have to add Bitcoin into it.
You have to buy their ETFs.
You have to buy their ETFs, and that's his whole point. Makes a lot of sense. Coming from his angle, it does make a lot of sense. You have to admit.
Yeah, and he's got no bias at all.
Well, to be like, who's buying bonds? I'm gonna like real question. Do you guys, anyone here own bonds in a meaningful allocation?
Well, so like
Mr. Banker over here.
Largest capital allocators on planet Earth are buying bonds.
There's a very big difference between buying, like when people are talking about the death of bonds, like there's a very different thing between being exposed to 30-year duration risk in US government bonds and then buying like 5-year corporate paper or like short-term private credit. Like those are very different things, right? Like corporate credit is not down 50% because of duration risk. So I just think that that's like a very technical but an important point to think about. Like, yeah, as a 70-year-old pensioner, like having a decent percent of your portfolio in like 5-year paper, I think is still very, very useful and very, very smart.
I mean,
Yeah, but if you bought Bitcoin with that money instead, you could retire your entire lineage.
It's very, very astute.
Yeah, but the point of buying bonds is like duration matching, right? So you have some liability and you need to earn yield over the period at very low risk. So like they serve a portfolio. Like that's why like I'm kind of a hater on all like the death of bonds story. It's like it really lacks nuance. They're very useful financial instruments. Perhaps, you know, they're less useful for retail, or perhaps some of certain durations or risk characteristics are less useful for a certain subset of retirees or whatever, but they're still like, they're not going anywhere, you know?
That's fair.
Yeah, I mean, I think as an industry and probably also as a group here, we've got a younger bias here as well. So the, you know, allocation to bonds is probably not the most important thing maybe at this stage of life. But I mean, James, you make great points. Ryan, you make great points. There's nuance there, and I think a lot of that gets skipped a lot because we like to get to the, you know, just allocate 50% to Bitcoin and you'll never lose type of, you know, the stuff that's all over the timeline.
And also like no one wants to own bonds when they're going down, of course. And like from an annualized return perspective, like the Barclays Act has not done well in this over the last, you know, whatever, 7 or 10 years due to the recent drawdown. But like the next time we have a banking crisis, you're going to want to own 30-year bonds because the yield is going to plummet and you're going to get a lot of nice convexity there and it's going to protect your portfolio. And we just haven't had that environment in a long time.
Yeah. Or I mean, you could just stake ETH for the 2% as well instead of the bond.
Yeah. Bonds are too risky, so I think we're gonna opt instead for the 6-month PT tokens of USDS.
That's what I'm saying. Danny, what did you guys cover before I was introduced?
Yeah,
So
we talked a little bit of macro with Felix. We talked a little bit about the Elon Trump crash out.
Oh, I missed it.
Circle, of course. We can talk Elon Trump crash out.
Did you cover the Selkis bit or no?
No, we did not.
We just covered one crash out. We can cover other crash outs if you'd like.
There were more crash outs that
There are
occurred.
plenty of crash outs.
Circle came up. Morpho and token structures, pump fund to an extent.
Did we do pump fund already? Because I feel like Ryan Connor.
Not quite. I'd be
No.
happy to discuss it in more
We
detail.
touched on it.
I did it already.
He said, "Oh, I already did it on another pod, so we don't have to talk about it here."
What do we think? 4 bill, 25%. So they're raising 1 bill at 4 bill. Is that a yes or is that a no? Like you can put a meaningful percent of your portfolio in it. Would you do it or not?
I mean, if it were trading at 4 times cash, you would, I think, you would put a sizable percentage of your net worth into that thing that's extraordinarily cheap. I think the reason the valuation is so low is because the token's not getting all of the economics. That's like clear. I think, but the problem is that the market doesn't, like, only the people who participated or saw the deal know that. I don't think the broader market knows the details yet. So I think it's much more likely that the token gets a small portion of the economics, something that looks like, I don't know, like a Jito, that would make the valuation much more reasonable and fair.
Yeah. Actually, I think this was posted on 0xResearch chat by Daniel Smith. The rumor is that it's going to get 25% of revenue, which at that point, would you say, yeah, this is decent or no?
I think it's fair.
Yeah, I'm with Ryan. It seems fair. I think you could look at just the Memecoin launchpad portion of it and call it pretty fair, and look at the growth potential and the kind of dominance there. And the live streaming, whatever community social app growth is like probably basically valued at 0 today. So you kind of get like an opportunity to long that. But I agree with Ryan that, like, if there was just the token and there was no equity, then I think that would be a type of scenario where, I mean, I would certainly be very interested in allocating, but it's far different if only a portion of the revenue flows to the token.
And yeah, and they might not raise the billion, right? That's still TBD.
Yeah, it's a lot of money. I mean, that's like, that's like crypto mega fund size. I think this is going to be a good test to see how much like idle liquid capital there is.
It doesn't even
also,
seem
like,
that crazy in the context of Circle and Bitcoin treasury companies, Sol treasury companies. Like,
I would
Yeah, I
say
think
those are
if they ask for $1 billion, they will 100% get $1 billion.
Really?
You think they know? They're 100% sure? I imagine they would know. They wouldn't just go out and say, yeah, we might get $1 billion.
I would be shocked if they formally said an ICO for $1 billion. I would be stunned if they didn't fully fill it.
I said before, like, gun to my head, I guess I would think that they raise it because I think that the appetite from funds is already way higher than I expected. We've definitely seen funds over time warm to the meme coin market and pump as a business. But it was only a handful. It was an impressive to even get to a handful, but like clearly there's, how much VC capital did they get? Like between 100, 300 million? Like it's more than I would have guessed.
Yeah, and think of how many think pieces came out within like 2 days on Launchcoin and Pasternak and all that kind of stuff. Like that is, if that's emblematic of how much liquid funds want to deploy, I think like, yeah, they'll ship it into pump fund with no second thoughts.
West, you are unusually quiet. I feel.
Well, I have something to say. So I'm curious what your guys' thoughts are on pump fund, like the quality of their cash flows and pump fund dominance as well within the sort of like meme coin trenches market. I personally think that their dominance has like basically peaked, or I don't think there's a lot of growth. The problem with like their business model and their sector being in this like deep in the trenches of like crypto trading, the problem with being there is that the meta always changes. The thing that people are trading always changes, and the place that people are trading always changes. And so while it has been pump fund historically, I have a hard time seeing that like always being the case, that this sort of form factor continues to proliferate, and you won't see new like launch pads come up with better incentive structures that eat away market share, as well as just like different types of trading. Like we're trading completely different stuff because the form factor always shifts. So yeah, I'm curious your guys' thoughts on that.
I was gonna say, I think this is like mitigated if the token is not locked when you buy it, like on the public sale. Because I agree with you. I think we could see like a shift away from it. But if the 4 bill public sale is just like at TGE, you're not locked for a few years or like a year or whatever. I think it's a risk that you can probably take. But if they're doing a 2-year lock, 3-year lock, whatever, even on like the public sale, then I agree with you. I don't think it's like even it might be worth considering, but it's a risk that you have to take with a team who will have already have made a lot of money to continue to dominate when we've seen that they're not. Like there's actually worthy competitors out now. I don't think Launch, the Believe is one of them. I do think that Meteora and the Jupiter side might end up taking some more market share.
I do think I'll agree to an extent. I think they're more than ever before, there's higher likelihood of them being, having their market share competed out away from them. Whereas in the past, I don't think people took them seriously enough for whatever reason. Like it was all this is all ephemeral. This is all this, that, or the other thing. It's going to go away. Like pump funds gone in 6 months. And so there didn't seem to be like even a desire to compete really outside of like the few, for meme on BNB is hanging out and having a great time over there. CZ's, pumping them. That's great for them. Nobody else has really been keen to go after pump until just recently, like in the past few months. So I'll say that like I think that's a higher risk now than it ever has been, but like I do think that they do still have a very meaningful network effect. Like we've seen a lot of these teams try to come in, Radium kind of punching back after PumpSwap comes out and they drop their launch lab. They do, they have the partnership with Bonk and do Bonk Fun. Not really much happening there. Same with Believe, like James mentioned it, people were very excited. It did a ton of volume really quick, like within a few weeks, and sort of had a very strong like blow off there. And I'd agree that there's an opportunity here to like pick on these like little subsectors that pump isn't really, they've not catered to anything specific, right? They've remained like this kind of neutral, any token, any meme, any whatever you want, like you can launch here. It's just one standard thing. Like the formula is always the same. But I do think at some point leaving that completely vanilla does open this playing field a little bit more for something like a Believe. If maybe they can still execute on it. There's time. It's only been a few weeks. It's not like it's over forever. But if you can pick out these sub niches that maybe tokens of that type are not served so meaningfully on pump and like draw eyes and volume to your platform instead, I do think that is a risk for them. Though obviously they're leaning into the live streaming thing. Like maybe they don't really care that much about ICM and they really want to like bet on the kind of social app and like network effect that would come with it. If let's say your platform is one sort of like a Twitch or a Twitter type thing that also has the casino baked in. I mean, I think that would just be a very powerful business that would be hard to kind of like to compete with in the future. If X or Twitter or whoever or YouTube was also the casino, I mean, that would be a very, very strong business. And I think it would be incredibly hard to compete with them as like an income or as a new entrant coming into the space, because they've got all the users there and then they've got the really like highly revenue generating and like eyeball popping stuff that the people are interested in doing.
Yeah, I think those are all really good takes. I think when I'm thinking about Pump Fund, I think the entire business is like premised on attention, right? Like you need to have people constantly launching these new tokens, and it's not entirely clear that's like people launching these tokens. Like I would imagine there's like a lot of bots that are like scraping the web and finding relevant news articles or like whatever. Because like no matter what, like there's always new tokens for whatever new meme. And I think like being first to launch the new culturally relevant event token is like probably profitable. So I imagine like that's a big part of their ecosystem that is kind of more in the shadows. I do think like all these streaming stuff is also important, but in terms of market share, I would hope that they use whatever new capital they raise to cement their market share and then continue to grow that as well. So it's like if you were to think about what is like Pump Fund's moat, I think it really is premised on like attention and network effects of that. But those are kind of the two main things that I think about there.
I have a question. Well, I guess first to answer Wesley's question, I think it's all about whoever owns the front end. I think Pump's going to get disintermediated if they don't. But question for the data team, I believe, so, and preface, our data's always right. And if it's wrong, we very quickly fix it because all the biggest liquid token funds rely on our data. But the time series has changed for trading volume that comes from external platforms for Pump Fund. I was looking at it like a few weeks ago and it was at 27%. Now like the time series has shifted and it's closer to 54%. And we haven't been at 27% for a while. So like, I don't know, Westy, do you know who the data analyst responsible for the Pump Fund Dash is and you know what they found? Because like clearly they found a new contract that's a new front end contract that's driving volume to Pump.
It's almost like there's this app called Axiom that does a ton of volume.
Well, this included Axiom before. So it's not like it was, I think they perhaps found a new smart contract or something.
Yeah, this is Jacob. Do you have a screenshot of the original? And you're talking about bonding curve volume, right?
I probably have a screenshot of the original in my net new asset report. And yeah, bonding curve volume. Yeah.
7% makes sense of like total AMM volume of Pump Fund coins.
We do, Ryan, have two queries now, by the way. One is bonding curve specific, and the other is this Pump Swap. And Pump Swap, it's like 29%. And bonding curve is listed at 51. And I don't know.
Had the two, though, right?
We've not always had the two.
We've not always.
Do you know when we got the second one?
I don't, but that would be a good Sharples question.
Pretty closely after the AMM launch.
Yeah, so we've had them for a while. We've had them for a while.
I'm gonna agree with you as well, though, Ryan. I think that's the other big piece here is they really need to own the front end. They need to own their users. Like if Axiom can, if it, like assuming this data is very correct, you know, if Axiom and Photon and these other apps can grow and grow and grow, and they're doing 99% of the volume that flows to Pump Fund, then it's like a very different picture to Pump Fund having, you know, 50 or 60 or 70% of its volume originated directly on the platform, or even if that's by bots that just directly interact versus, you know, some other app has the direct connection to all these users.
Yeah, so confirm that it has changed. I do have a screenshot of the historical. I'm sending them along now to the group.
James, any thoughts? Mr. Christoph?
No, you lost me. You lost me at data front ends. This is not my forte.
I'm going to share something as well that is also a bit of a change up that maybe folks aren't expecting. And maybe we'll need to, you know, double check and confirm with Sharples as well. But he's got some new charts cooking on the DEX side of things, showcasing market share. And for Meme on BNB is like really a player in this space, if I'm being honest. Pump Fund has been the dominant Memecoin or just general like sort of launch pad. And recently this like run that BNB is having is really rocketing for Meme's dominance, which is interesting. Now, I don't know that there's a lot of like user or customer crossover between for Meme and like Pump Fund today, or even like between BNB and Solana, but maybe that changes if all of the hottest tokens start launching over there.
Do we can we look at the absolute number?
Yeah.
I think I do. You guys know how much I love the market share charts, but I do believe that in like very low, as the cost to participating in these things gets like really, really low, I feel like the absolute numbers for like launching tokens, launching individual tokens, like matters more. Oh, so sorry. This is a volume number.
Yes.
Gotcha. Okay.
They're doing several hundred million as well. They're, not, they weren't really even in the picture, but they had a prior sort of move back in March. There was, sort of a previous Memecoin boom when CZ was talking about his dog and all that stuff. And that actually was like a massive amount of volume for them. And then recently again, and I think some of this, there's been a lot of talk, like what's happening on BNB, what's happening with PancakeSwap. Our friend of the show, friend of 0xResearch and Blockworks, Tumilet, shared some details in the Telegram the other day as well. There's some trading campaigns going on with certain tokens on BNB chain. And that's spurring a lot of activity. Basically, select assets have, volume related incentives associated with them right now. So people are trading those, then they get, brought over to Binance Alpha, and then Binance Alpha is kind of like a line of sight to getting listed on the exchange. So it's driving a lot of user activity. Maybe this is reflective of that. People are they're hoping to hit, the new hottest meme that does 1000x because CZ talks about it. But there's no reason that train has to stop if they want to keep promoting tokens in the ecosystem.
Well, it seems like it's pretty inorganic, right? Or no?
Ryan Connor.
I don't know how to make it.
Wait, guys, I want to do kind of a segue into the protocol.
One sec. Clarifying on the data, the reason why it was different is because we tagged more Axiom wallets that other sources had not found, and that's probably, I don't know if you saw some charts circulating X yesterday of like supposedly a huge drop off of Axiom volume, but it's likely because these accounts didn't fully tag the amount of Axiom wallets that exist. So that's why there's a change. Just want to clarify for the audience, but go ahead, Bach.
Thanks, Weston. I wanted to bring up the protocol. No, he left. I wanted to bring up the protocol that Ethereum released and their like treasury thing. Did you guys look into it? I know Danny and Ryan Connor are immediately going to say, I didn't look into it, they're dead in the water. But Westy, I'm hoping that you may have looked into the protocol thing and might be able to actually speak on it a little bit.
Looked into what?
What are you talking about?
The Ethereum blog post from like 3 days ago.
Oh, like
they said they're firing the research and development team, bringing everybody under Dankrad. In fact, we didn't talk about this, right? Ever?
I don't think so. We don't know like too much of the details other than what they publicly announced, which is basically they're hunkering down. They're like changing around, having specific teams focus on their specific outcomes of choice. So scaling the L1, scaling blobs, and UX improvements, and they're putting people in place in each of those categories to lead the charge. And then Dankrad is overseeing all of those teams. That was the key piece that I read. Honestly, skimmed over the rest, but that was a key piece for me of like, okay, they're having, again, it's at this point it's still all talk, but the talk is way better than it was 6 months ago, and everything they're saying is the right thing, and they're approaching things in the right way. And Dankrad leading the charge, I love, because I've always loved, his contributions to Ethereum research, and also, his opinions and how he views things, his work ethic. So I'm a big Dankrad fan, so happy to see him leading the charge.
Do you agree that you specifically said that everything they're doing and from a comms perspective right now is correct? Do you actually believe that?
Well, no, like from a process standpoint. So my assumption also with this is that they're like firing people, restructuring, and this is how they're restructuring. Like I wouldn't say it's like if I were to give it a grade, it's definitely like an A-. It's not perfect. Like it's great. Yeah.
Do you think they're going to be less opinionated on use cases in the future? Like, do you think they're going to ever be as agnostic as Solana, for example? Or like on what level? How close to that will they be?
I don't think they'll be fully agnostic. I do think Vitalik in the past being like weird about DeFi, like I don't think that's going to be a thing. I think they're going to very much prioritize DeFi on the L1, and I think they're going to be somewhat opinionated of like these are the type of use cases we want on the L1, and it's going to be mostly DeFi focused. But yeah, I mean, I feel like you have to be somewhat opinionated, although for the most part, agnostic. Like you don't want to be the chain that's known for like Tornado Cash and like North Korea coming to your chain, right? Like there's some amount of curation you want to do, but for the most part, you should be pretty open to like whatever people want to build.
My thing here is that I feel like every 4 months, Ethereum does one good like comms thing, and then everyone's like, "Holy fuck, Ethereum's fucking back. Sol is dying."
It's still all talk, right? It's like they haven't done anything different, really.
Did you see that arrow that says next year it's going to be a global reserve currency from the Bankless podcast?
I think just like I have the same view that I did 3 months ago, 4 months ago, 5 months ago when these talks started, where it's like, yeah, we put together a new group of people. We put a new person in and we got a new person in. These are the new missions. Like just ship a product update a little faster than you have in the past. Scale the thing a little faster than you have before, like you say you're going to, and then like I'll be more positive about it. But until the announcement is like, okay, we scaled blobs by X instead of half of X like we were originally going to, then it's just like, all right, we're waiting.
Until they ship a hard fork in a shorter amount of time than they plan, like it's still all talk. Like they need to ship.
It's a bit weird too that like no one who's building an application that is used on the chain seems highly opinionated about the chain's future. Like who's the most opinionated DeFi builder in your guys' opinion? If you've seen someone who like continuously speaks out on what the direction of Ethereum should be, and that's like the main thing it's used.
Mark Zeller.
Does he speak out on the chain itself though, or just like Aave?
No, he just says just use Aave. Yeah, and like that's great, but like like I think there's a really compelling DeFi use case happening on Ethereum. Like actual DeFi usage outside of like trading is much larger on Ethereum than it is on Solana or anywhere for that matter. And you have no opinionated devs showing up in discourse around the chain's future, which is just kind of crazy because it's like they're using your product. It's like it's just bizarre. It's just so strange.
I feel like this is something that has come as a result of, in the past, Ethereum Foundation never talked to application developers. Like your biggest DeFi founders are like, yeah, I never talked to the EF until like many years after I founded this thing and it had billions in TVL. I think that's just a result of them not, like the Ethereum Foundation and app builders not being close at all and feeling like there's no mode of communication. Hopefully that changes recently. And I feel like there are some bigger DeFi founders, like Kane, I feel like has been pretty vocal about here are Ethereum's problems, and was also like took a leap of faith building on Solana with Infinex and being like, this is an okay approach to scaling, where like most .eths would like never even speak of Solana. And you also have like Leshner, I'd say, has like thrown some criticisms here and there, not anything too harsh, but I'd say like app founders for the most part are making themselves known. But it's few and far between. I think a result of the past relationship between app developers and EF.
Yeah, we got a couple months, and then Christine Lagarde and everyone, the ECB will be adopting ETH. So it looks like we're on track, I think.
Soon. One thing about ETH that I always feel like is kind of relevant is most teams and protocols, they create a foundation and they don't really rely on the foundation that much. It's just there. Versus ETH, I feel like really works with the foundation all the time, almost like they didn't realize that it should not be making all of the decisions. is this correct or am I being stupid? Like, I feel like in most teams, it's like the labs that's like actually making the decisions versus underneath it's like the foundation, right?
So when the when the media push for ETH, the so-called ETH pivot started, I dove back into ETH media and listened to a bunch of hours worth, and any EF person who was doing official comms on a pod, like I listened. The interesting takeaway is that their framing of decision making over time like differs from what the market thought it was. I think the narrative was that ETH decision making for a long time was too decentralized and disorganized, right? Like our decentralization was too good and we got in our own way. But I think it was Tomas and perhaps Donkrad or other important people in that ETH core. They specifically said that decision making would happen from Vitalik with 2 or 3 other people in a Telegram group, and now they're going to get more opinions before they move on things. So they actually had a very highly centralized decision making process that did not go well for the community from end of 21 to present. And now they're actually telling you that they're going to get more decentralized and consider more opinions in their decision making. So it's actually the opposite of what the market thought was going on, and they're actually telling you that's going to get worse.
It's pretty crazy. Yeah, when you put it that way, because like definitely there can be a lot of benefits from highly opinionated people making decisions when it's like you're not really taking any other ideas in consideration, but maybe they just like weren't super opinionated, or I have no idea what was causing them to, stall like they were before. But thanks for doing your DD there, Ryan. I'm sure there's a lot of mental trauma that you're now having to deal with, and so I mean, just really put yourself through it for the community there, man.
I think that ETH podcasting is like fantastic. They've been doing it for the longest amount of time. Like they're super high quality conversations. Like, yeah, sorry, Bach. Like it's fantastic over there. The water's warm. Like
they're very, very good.
They're very good. And it's entertaining. And I feel like if you are really into just like philosophical musings, like no one does it better. It's really entertaining. I could do it all day.
Yeah, but what's the point of all that? No offense.
Yeah,
like at the end of the day, like it becomes a bit like not boring, but like show me, right? Like it's been 10 years. Like I feel like just sitting here and having philosophical conversations is fine, but if it's not productive, then there's no real point. You know what I mean?
And that's what the market's telling them, right? It's like it's not productive, and even this time they're not believing it.
It's easy to be academic and pontificate when you basically have a monopoly and there's very little competition. But as soon as you have competition up your legs, that's where you do what they're doing now, which is oh shit, and like hunker down, restructure, wartime. At least, I mean, that's what they should be doing, and it sounds like that's what they're doing.
Do you think they never realized that it was valid competition until
yes
now?
They
had Justin Drake on a Bankless podcast when Solana had more RED than ETH, being like, "Oh, it's over. ETH won." Like he literally said that verbatim.
Yeah, I think they never viewed other smart contract platforms as their competitor and only viewed Bitcoin as their competitor. I don't think they were looking backward at all, and I think they were looking forward. And like to your point, they were the incumbent, so I think that makes sense. But I think it's definitely a mistake for them to have like picked Bitcoin as the only competition. And I do think it only really started to kind of actually, get a lot more momentum across the crowd when you saw other metrics pop up that Solana was doing much better on versus Ethereum. So I totally agree.
And I just don't think like you can't be that opinionated and win, right? Like I think trading meme coins and like gambling is like pretty dumb. I do a lot of it. I think it's stupid, but like that is the market. Like if you want to sit there and yell at the market and say it's wrong for 6 years in a row and you should be focusing on more serious endeavors, like back to the philosophical point, yeah, you can do that, but like that's not what people want. So like, I mean, too bad. Like the market tells you what it wants. Build it.
You can be opinionated and win. You just need to be right. Like, otherwise, you need to let the markets do its thing. Yeah.
Interesting. I think there are a lot of problems with the recent comms. One, and I guess that Darren from our team pointed out that someone in one of like the ETH monthly meetings or something like recently brought up fees, but in all those hours of ETH official media comms that I listened to, they did not once mention the word revenue, which is a problem and is the fundamental reason why the ETH token is lower, is because its revenue has fallen 95% from peak. So it's not a surprise to me that the token's like whatever 50% from peak. So they still fundamentally don't understand the value driver for the token. I think the other issue is that, you know, just a few days ago, Vitalik was at a conference and said DevX is more important than UX. And I don't know.
That was clickbait. I'll clarify. It was a clickbait clip. They were asking about a very niche specific thing of like, in this specific ZK type of design system, he thinks that right now today, the DevX is more important because it's so early stage. I got baited too. Don't worry.
Gotcha. Okay. So I stand corrected, but like, if you were to, I mean, okay. So yes, I am wrong. Got clickbaited. What would the evidence tell you though? Like that they think, because I don't know. I think that the evidence suggests that UX is still of little fundamental importance.
Yeah. I mean, they hate the users, Ryan. It's like you always say. I agree with you. It's been a worse experience for a long time. I think like the Ethereum wallet experience, like the transaction signing experience, like a lot of pieces, and like it's gotten much better than it was in the past. You know, there are better wallets today than there were a few years ago. Rabby's quite good for an ETH wallet. I'm sure there's others. And there's other kind of, obviously there's lots of other parts to the stack and what the user experience is, but it really has not iterated as fast as I think that they should have been. I don't know why that was like not so much of a care for these teams. I guess launching like the 50th L2 was more important.
Well, like also think about I mean, this is interesting. Think about our pump fund conversation where we're constantly saying like, hey, they have to own the front end. ETH has totally given up the front end. The centralized exchanges favor their own native chain. The wallets are no longer solely ETH wallets and in many cases don't default to ETH. You know, ETH is not the, it's not the favorite chain on Phantom. It's not the favorite chain on Coinbase Wallet. It's not the favorite chain of Coinbase. So ETH is very much fallen further away from the user. And so maybe UX doesn't matter.
I will say UX is distinctively one of the core pillars of their future visions. You have scaled L1, scale blobs, and UX improvements. So that is like one of the things they're working on. Is it too late? I think is an important question. Like, yeah, there's so many UX issues, like too many to name really, with Ethereum, the EVM, etc. So like obviously they haven't prioritized in the past, but it sounds like they're going to. Again, all talk, we'll see. On your revenue piece, Ryan, have you read the Cyberfunds ETH thesis? I think that's like the most grounded Ethereum thesis I've probably read yet of anything. Definitely.
What is their significance though?
Well, the founders of Cyberfund were like Lido OGs, like Ethereum OGs, like very much involved in like governance and etc. of Ethereum. Yeah.
I mean, I think that the fact that their priority of scaling the blob market, which is in a way contradictory to scaling the L1, right? Because the two are competitive with one another. You're supporting L2s, but then you're also saying that we want execution on the L1. They still fundamentally, I don't think they know. It's not a clear. They're not prioritizing, in fact, execution fees on the L1 if you're scaling blobs, right? You're helping out the L2s, which are effectively your competitors for execution fees.
I mean, you can do both at the same time. Like, there's no reason. I mean, maybe with like capacity constraints and how quickly you scale, but in theory, you should be able to like add more blob capacity while also increasing the gas limit.
Yeah, you could do both, but if you were focused on maximizing revenue, you would solely focus on that thing, right? because scaling blobs is going to help L2s get market share faster than you.
Yeah. And I think part of that piece, like their piece was scaling the L1 will bring revenue back. I think that like the other piece that they really focused on was solving interop. And like, yeah, revenue generated from that is sort of a bigger question mark. But that's like, I think that's like scaling blobs and having more people post DA, because DA is super valuable because you get some interop standards from it, and then they can charge a higher price for that DA because of those properties. I'm not saying I completely buy the thesis. I understand like where they're coming from. And at least in the piece, they talked a ton, like they used a ton of Blockworks data and did talk about like revenues and like ultimately at the end of the day, how much value is ETH accruing. Whereas like you never hear that really on other ETH podcasts or ETH media.
Yeah, it'd be nice if you heard whoever's in charge of the EF mention revenue. They actually brought, like I was listening, it was like John Charb, I think, on Bankless with one of the guys from the EF, and they all brought it up and all laughed about it, and they all chatted about it like very quickly, the rev debate, and Tomas didn't say anything. He's like, I think he specifically wanted to stay away from it because of how the community might react. That's just me reading the tea leaves.
Kind of a weird thing to do. Guys, should we also shit on Solana a bit, or focus up on for the rest of
Let's open it up. What do we want to talk about? What's interesting right now? Hyperliquid is a big one. What other like tokens, narratives, trends are we looking at? Maybe this is a little bit of a trench talk on Friday. What are we interested in, chat?
I think Pikachu wants to go bear mode. I think he wants to.
That is not true. I'm not going bear mode.
Let him run free.
You want to say he's got something to get off his chest.
I don't have anything to get off my chest. I am happy in the tokens that I own, and that's it. I did sell my Solana, just FYI to people. Ryan,
that's the third time we've heard that this year.
I just have to sell it. I just have to say it out.
Never buys back in, but always fully sells.
I fully sold. Not fully. I sold it. I'm unhappy with its performance. I've instead opted to buy other tokens that only go up as opposed to go down.
Yeah. And what tokens?
Like selling into weakness? Is that part of the strategy?
Yes. In fact, anytime I get slightly emotional, I don't look at numbers, revenue, anything. I just look at it as a holy fuck, this might go down. I gotta sell it.
What's the quote? It was going down precipitously. I don't know who would sell.
Exactly what I do. I get really nervous about it, and then I just, holy fuck, I need to get the fuck out of this. Sometimes I do TA. James Christoph really helps me out. He has this VWAP strategy that is unreal. He needs to explain it out. But yeah, I mean, I wanted to talk about Solana's weakness, but I guess we can't do that because Danny wants to.
Did you sell just because price was down more than?
No,
No, we can talk about Sol. I just want to talk about, we talked about ETH. Let's talk about.
I'm just trying to dive in of like, okay, you sold why? Because it was going down.
I just don't think that I think there are other L1s. I'm not going to show them. I think there are other L1s that might do better in the medium to long term, and that have been doing better in the medium to long term. And I think that the Sol's returns may not be. I'm not bearish on it as an asset. I just think there might be better things to buy. Is my take. I'm very happy to be wrong, because that would mean that you guys are winning, which is more important than me winning.
You're so selfless.
I am. I'm very nice guy.
But I largely agree, actually. I think Sol will likely underperform newer chains. I think, I already said, I think I have some question marks on pump funds dominance. And I just think like people want a new game to play, and the Solana game to me feels like it happened. It's super saturated. And so like I think the likelihood that we see a new game elsewhere is like the highest it's been yet. So it's kind of a general thesis, and it's not like I'm looking at specific data and making that. It just feels like if there were a new game that it would pop up somewhere else.
I mean, isn't that so? okay, what do you think about this pushback where I just think that that's kind of like backward looking. Like what's happening in crypto is very different from what's happened historically, where like in crypto, like you could argue like it was like a fixed capital environment. You had the same players moving assets around and chasing the same returns and trying to do that new game. Whereas now you have a new source of capital coming into these markets. Now that crypto is legal in the U.S. and you have regulatory clarity in both the U.S. And Europe. So like why we said earlier that a new game is always played, but I'm particularly bullish on incumbents because these are network effect businesses and capital is going to go to where there's liquidity, especially professional capital.
So to me, there's like two different pools of capital. There's the professional capital and there's the degen capital. And to me, pump fund and a lot of like the Solana volume is the degen capital. And to me, yeah, like most of the new money entering the space is this like professional capital, that's what's bidding like the Circle IPO. And like the degen capital to me is always looking to be early to the new thing. And like is mixed in with like CT and KOLs of like sort of creating self-fulfilling prophecy of what the new thing is. And so to me, it's like, are you really early to this Solana pump fund game? Is there really exit liquidity because people know what the game is? To me, it's like the degen capital feels like it's going to go elsewhere.
Yeah, I guess you could argue that like 70% of Solana activity is that.
Yeah.
50 to 70%.
The counter argument here is that Solana is, I think the user base that Solana is attracting is actually very different to what we've had historically. And it's like 18 to 19-year-olds with a Phantom wallet and some Solana.
That's always what it's been.
Really. Huh?
Were you trading in 2021? That was literally the same thing. It was like 23-year-olds who are buying these like third grade DeFi protocols on like your fifth L1. It's the same thing. It's a different game.
Yeah, fair enough. Good point. That's just like something that's always in my mind is there an extra group of people that I'm not indexing for, that I'm not thinking about? I feel like that's the one that I'm not.
Yeah, I think it's natural that like, I mean, the silly fun games that's index is lower on the age group. Like it's not surprising that a lot of the consumer experiences appeal to the 20-year-olds and the Gen Zs and the millennials. And then like the idea of like, just earning some yield on dollars is maybe that percolates up the age demographics a little more easily than like gambling on a random token ticker. But I think I agree with your point to an extent here, Westy, of like in my head, I do like the idea of trying to find a bet on if the next game is Pump Fund live streaming, who knows? Like it could be, or if it's something else tangentially related to like the stuff that already we had meme coins and NFTs and just dexes and then now launch pads, and like if there is like a slightly modified app that has a token and I can bet on that, and like with Solana's market share and Pump's market share and Hyperliquid's market share where it is today, like sure you can bet on growth, but I mean I think you do have a point here. It's like you can apply some growth number to that and look for those returns, but this space, what I think for me has always attracted me and what's always interesting is that there are just like constantly these like 0 to 100 opportunities where nobody's using something and then all of a sudden it's the hottest app and it's making $500 million a year. And if you have the opportunity to get in on that thing, that's what I find exciting. And so, yeah, I mean, I wouldn't be surprised if something else pops up that's not Pump Fun and is, you see the headlines in a year or 2 years that are like, this new app got to 100 mil ARR in 3 days and it's a crypto app.
If you guys liken meme coin trading to like sports gambling as kind of like a crude analogy, how much bigger do you think the opportunity is to expand meme coin trading compared to like, if I just very crudely think of like the market caps of the top publicly traded sports gambling and like online blackjack companies, like how much larger is the TAM for meme coin trading, and like are we actually already saturated there? And one thing, like I did mention in this, I think is interesting, Westy, I talked to you about this and put it in the Blockworks Research subscriber chat, like asking for a dashboard that looks at the median, call it like peak market cap for an on-chain call it runner for lack of better words, and how that changes over time. And like obviously I think everyone would agree right now the market feels like super weak, where something might run to $5 million and then completely die, whereas 5 months ago it could, that could have ran to $100 million on chain. Just curious what you guys think about that.
I think that there's a solid chance that the TAM for meme coin gambling is larger. On an annual basis, it already does more volume than traditional gambling in the aggregate. The only difference is the profitability of Pump is lower than that of DraftKings. I don't exactly understand why, but I have to look into that. I guess the spread's larger on DraftKings. I think that the risk there is that the meme coin game is too opaque. So the nice thing about sports gambling is that you very clearly understand when you win or lose. You can bet on the game, you can bet on the over/under, you can bet on the next pitch, you can bet on individual points scored, rebounds, whatever. But on meme coins, it's a little harder to understand how you win, and perhaps that is a bear case for the TAM being larger. But I think just very simplistically, I think that meme coins increase fun and minimize the barriers to multiples on capital, like sports gambling. Like I don't think comes close. So that would be my reasoning for why I think the TAM's bigger.
Yeah, to your point of like the opaqueness of meme coin trading and the difference of sports gambling, like I liken it to, right, I think we're probably at peak saturation for sports gambling in the United States, right? I don't think it's going to expand as a percentage of people that participated in it that much. And yeah, you of course do have professional bettors and sharps that are in the market. I think the difference between a sharp in sports gambling and just your average college kid who's betting on sports is very, very different than if we 10x the TAM of meme coin trading on Solana. You're going to have extremely, extremely sophisticated participants, even more so than are in the market today, that are going to come in. And I think it's an inverse relationship. You're actually going to get a worse user experience for your average person who's punting on chain, because they're going to get ripped off by actual, guys at Jane Street that are now trading on Pump Fund because the TAM is 10 times larger. Like I think your experience is actually going to get worse the bigger it gets.
Yeah, I mean, sports gambling is pretty professionalized too, right?
I have talks on the pod, and he used to do it professionally, day to day. I don't know.
No, but I mean, your win rate as a sharp is very different than your win rate professionally bundling coins on Pump Fund. That's the point. Very, very different.
Yeah. And think about like who your counterparty is and how you win like a certain scenario. Like if you're gambling, your counterparty is these like the books basically, unless you're doing some like prediction market. Like you're gambling against these other people that are running statistical models, and so the idea is to like bake out like a small amount of edge that compounds over time. And your counterparty with memes are like you're like dumb retail trader, and the way you win is you're just early. And so what that means is the game gets saturated when people realize you make the most money spitting out tokens and like causing them to go viral. And at the end of the day, like no one wants to be the exit liquidity for these like token farms. And so like the game itself is set up for people to lose way more, like your average person.
I think that's fair, but I still think there's an opportunity for like, Ryan did his net new assets write up. And I think like there is an opportunity for more of these like categories to unfold here where, I mean, we've kind of seen bits and pieces there where like just the core launching memes, which a lot of it is either news type content or it's like who can come up with just the funniest thing in the moment based on a reaction to something. And then maybe fight against the other 16 launches that are trying to do the exact same joke. But if you can, the live streams is one question mark, right? Can you tie a token to content creators? Are people interested enough? Are like audiences interested enough to like bet on the mind share or like the growth or like the virality potential of a creator that they like? Internet capital markets is another one. Like, is getting Web2 startup tokens on chain like something interesting enough and durable enough that people want to like bid those up consistently. I think there's other opportunities for like these different sort of plays on the same idea, where the game can be different from how it is in the past, where, you know, in ICM, there can't be 10 tokens for the one business, right? Because there's the one business and the one business launches the token. And the same goes for, you know, the content creator, right? So you get rid of some of those issues. And there's different ways to kind of maybe play some of these categories that could unfold, which might lead to, you know, some of that additional TAM expansion. But these are all, I mean, they're relatively unproven still, right? Like Believe had kind of a little bit of a blow off moment. The streams, they're not doing much today, but they're definitely leaning into it. They want to incentivize it. We'll see if other categories can like draw that attention.
Bob, did you get a haircut?
I did, but he kind of fucked up the front. I look like 1010, if you guys know who that is. I look like a kid.
Do you guys think I mean, the trenches feel back to me, like it's getting easier to make money?
Why aren't you sharing these opportunities with me, Ryan?
Yeah, I don't know if I agree.
I thought they felt good like a month or two ago.
Yeah.
It feels a little different today.
There's always pockets where things
Yeah.
are fun, and it feels like the time windows have shrunk of these pockets.
What do you think the catalyst for like the trenches doing well is? Because I feel like it's always just like a run up in like Sol, the native asset, or like some, I don't know. Yeah, I'll leave it open. What do you guys think?
I think it's days like yesterday where a viral social media moment happened, and you can look at the numbers. You got a big spike in Memecoin launches and trading volume yesterday, just like kind of off the charts. Which is why I think yesterday was so good. Everyone just wanted to find the next thing.
Yeah, but even yesterday, there were like tokens that I feel like before, if this happened, we would have like 15 to 20 runners in a week.
Yeah,
and
it's
like just one. Like we didn't even talk about. There was no Selkus token, no Peter Schiff token. You know, there was just like one or two. There was a crash out token that didn't go up a lot. It was just a weird, like it's not how it used to be, if that makes sense. Where it was like there would be like 25 of them, and then like and also like before it would be like everything would hit 15 to 20. This is just like very normal though, no? Like it's over industrialized now, and it's becoming more and more like there's 1 billion tokens out instead of 1 million tokens out, which means that things don't go up as much, and when things don't go up as much, people are like, they're wary, they don't really want to buy it. The attention doesn't go up as much as it used to, which I think is fine because pump fund still makes money. So for pump fund, it doesn't really fucking matter because there's 1 billion tokens that are doing 10,000 volume each instead of 1 million tokens that are doing whatever the math is in that case, volume each. So to them, it doesn't matter. But like
guys,
overall,
something news that we can shit on. Gemini filed for an IPO, so can we discuss how low valuation they're going to get?
I want to talk about Box thing. So first of all, it's actually not in Pump's best interest.
Sorry, Chris.
In the same, we'll get back to the Gemini.
James, we're gonna get back to you. Westy is gonna shit on me, and then we're gonna shit on Gemini, and then we're gonna end it. I'm sorry, James.
Yeah. Like that's just gonna be like that's whatever. Yeah, it's like a casino, right? Like people like casinos love when people win big and promote that big win, because then it really draws people in and they win on the totality of like in the long run they're going to take their cut, and so the more people betting the better. It's the same for pump fund. It's like if there aren't runners that are going to crazy valuations, then you have less people trading the tokens, which means less people launching the tokens, and it's like a whole reflexive loop. So I don't agree with that piece. And like in terms of the original question, to me, it's like a function of both liquidity and like exciting events or things happening. And so yesterday was like the exciting things and events happening, but there's not much liquidity to me in the trenches right now compared to like November, December of last year. Like that to me was like, oh, like the trenches were booming then. Whereas like yesterday, like Box said, it's like you had maybe a couple runners and they detracted so fast. So to me, the trenches are not really that back.
I think that there's a curation problem, very obviously. Like, I think there need to be some automated mechanisms to just like filter out for like bad bubble maps. Because now like the Axiom feed's pretty dog shit. I think it's full of things that, you know, you might not want to, like, you need an aggregator to curate the experience to make discovery a more pleasant experience.
Yeah, I think I agree with this point, Ryan. And right today, the model or the design is like you go to Axiom or Photon, Memescope, or wherever, and it's like all the filters are available, right? You could filter out all of the things that you want to filter out, right? Like anything that's got more than 20% supply held by one address, or how much is bundled, et cetera. You can ignore all that stuff, but the fact that it still plays into the same dynamics, right? Like if not everyone is doing that and there's still people buying those other tokens, and like it doesn't really like directly address the problem. They're just still going to get all those bundled launch tokens that suck a little bit of the flow that would have maybe gone elsewhere if there was a little bit more of a curated experience. And it seemed like it, at least in the short term, was exciting enough for Believe. I don't know what the best way for Pump Fund to do that is, though. Like, at least with live streams, there's, it's curated in the sense that, like, if Aiden Ross or Ansem or whoever, Gainsey, has a stream token, it's like, there's just that one token, right? They show the live stream on the platform, there's the one token associated with it, right? Like, that's straight up curation from, like, how many views their stream gets or what have you, and there's nothing else really to do there. But, yeah, with the news type content, that's harder.
Can we talk about Believe, like, super specifically, just for, like, 5 minutes?
Westy, is that okay?
Yeah, he doesn't want to talk about Gemini
Yeah,
now. He wants to talk about Believe.
Westy, is that signed off?
Yeah, go ahead.
So would you guys agree or disagree that it's done at this point? Like, he missed his window of opportunity and like the entire thing is cooked?
I said, sorry, Ryan.
I don't agree.
I don't agree either.
I don't agree.
Bach, did you agree?
I think Pasternak mode is very much a thing, but I think for the time being, it's like he needs to come out with a V2 product, and that needs to be good. My only thing is that in crypto, if a chart, it's more difficult to come back because your product is kind of reliant on your chart. He could come back, but I think it might make more sense for a competitor to launch that is a V2 that is much better. Like, I said this on the pod and Ryan called me an idiot because he was like, that's very obvious, but the V2 is always better than the V1. Like, the shift is so dramatic. Yeah, and I feel like the V2 era of God forbid.
He had this crazy take that the next gen of products are always better than the previous gen.
Update 2 is better than update 1.
Wow.
Right? Like, I feel like that's a decent take. It's like a good hedge.
Oh, have you seen the chart?
No. Is the chart good?
It doesn't look that bad.
No.
That's fine. But I just think his window of opportunity, he just refused to realize, like, it's crypto. You need to ship stuff within like 2 days. There's no like, hey, we're going back to the drawing boards and we'll be back in 2.5 weeks with an update. Like, he had some like serious momentum, right? Like when Launchcoin was big for that first like 5 days or so, like that mind share was fucking crazy, right? Like that's all I was thinking about. I know a lot of you guys were super involved in looking at those coins too. And like he just lost that within like 2 days by being way too slow. And to your point, Bach, of like V2, yeah, V2 is better than V1. He could have just launched like a shittier version of V2 and like it would have been fine. But like if he just did something, like even if it was an incremental gain, it would have been something versus him just like randomly replying to tweets and being like, yeah, we're going to think about this and take it into consideration. Like he just wasn't playing to his audience.
I agree. You do have to ship. I mean, you have to ship really, really fast when you have the attention on you. That's, I would definitely agree with that take, but I don't think he's done forever here. Like the interesting part of what Believe was trying to be is still interesting. But maybe that takes more time and he needs to go back to the lab and, have a better, like consistent onboarding flow of like startups who are willing to launch tokens on this thing. Because I think that's, if you can achieve the unlock, then I'd say there's a chance, right? Like if the next Uber launched a token, like rather than doing like an equity raise or something on chain, then like that's very interesting and people are going to want to buy that.
I think it's interesting because he has a opinionated go to market on the supply side of specific token issuers that are. It's just a really interesting niche. I also think, given that go to market, it doesn't really matter that he's not capitalizing on momentum today. Like I think most crypto apps, like they need to own the moment or else they die. And because the supply side is so unique, I don't know how much it matters. Because if you win an interesting token issuer, all of a sudden your app is relevant. Your app is relevant again.
The downside is people have seen this, it's twice now, right? ICM moment 1 earlier in the year, ICM moment 2, and will there be more competition for ICM moment 3? I think that's the question.
Wait, did we already have moment 2?
Believe is moment 2. Moment 1 was like January, February when we had Jelly Coin or what have you.
God, that was the dark time.
That was the original. That was the first pop up there.
This one's so much more serious, though, I think, because of what Believe is doing. Like the first one was inherently scammy. It was just like, hey, buy Vine coin to support like the Vine, like whatever the Vine team did historically, which like makes no sense. But this kind of like, we're kind of like nearing phantom equity and integration of the token within the product. There's like a very sophisticated effort around helping founders understand how to manage these communities with like, I think it's called like the Believe playbook. It's just much more professionalized than the first go around.
Yeah, as the great philosopher once said, V2 is better than V1.
Yeah,
it's a hot take, but I think it's correct.
But V3 will be better, Ryan, and maybe it's not Pasternak.
V3 is going to be even better than V2.
See, that's the thing. That's what you think, not necessarily. I'll dive into it on our next spot, but it's not necessarily true. So just keep that in mind.
So he's already making improvements to the model, like understanding, getting feedback. Okay, this isn't working. Like with the snipers and stuff, he's trying and incorporating stuff to stop snipers. He's again trying to figure out the curation thing. He's going to iterate over time. And as long as there isn't some competitor that's figured it out and hits the market, they're really the only one focused on ICM token launches. And all it takes is 1 or 2 like really, really solid projects to launch their token on Believe, and this thing like rips. Because then you get the reflexive cycle of, Web2 builders see the successful builders launching on Believe, raising a bunch of money. They then launch their tokens, and it starts like a really cool reflexive cycle.
All right, I love it. Let's crash out on Gemini then. James, you wanted to talk about it. IPO for Gemini.
Yeah, I mean, it's probably the worst run exchange and like one of the worst run crypto companies that I've ever had the mispleasure of experiencing and working with. Yeah, it's shocking to me that they're still around. Does anyone have anything good to say about Gemini?
Did they do something to you?
No, it's just terrible. It's just a horrible experience. It's just like they're just a company that will not go away, and it's just terrible. It's a terrible
Do they have
company.
a license? Do you know?
James, you're muted. The Winkle
Sorry, what'd you say?
Do they have a bit license?
That I have no idea. No, but in all seriousness, I got like a really sour taste in my mouth after Genesis, and their whole program is it just stunk, and it was just a very bad. They didn't resolve it well with customers, and they've just been super slow on everything, and they've just never bothered to really expand, right? Like their institutional offering doesn't exist unless you guys know differently than me. And I don't know why anyone would buy their IPO.
Where would Gemini rank? Like,
So
if you're gonna make a list.
Yeah. Do you mean like volume wise or just like the James Kristoff version?
yeah, metrics wise. Sorry, not like because they murdered his dog.
So yeah,
I mean,
so
I'll pull the order book. Yeah, sorry, go ahead.
I was just gonna say they do 10% of Coinbase's volume. The majority of their volume is both in like the BTC and ETH pairs, and then their alt liquidity and their alt coin volume is like pretty dismal. And I imagine that's where you make a lot of your money, given a lot of these exchanges have like, you know, tiered fees, and a lot of these people who are probably trading these two majors are probably just arbing across multiple venues. So,
Yeah, like their 24-hour volume on BTC is not even $100 million.
What? That seems ridiculous. Surely that's fake. You're lying to me, James.
I'm on exchange.gemini.com. 24-hour volume is $197.6 million on BTC.
I was going to say we have a nice centralized exchange dashboard now, but we did not include Gemini. I'm guessing maybe because they were not large enough. So maybe soon.
I mean, yeah, it sucks that they were caught up in that the Genesis thing. Like maybe things would have been different. It's been hard in the exchange space. I think Coinbase was a early first mover, and they really benefited from regulatory arbitrage, and I think it was hard to compete. And perhaps the Winklevoss twins are already rich. I know that they are a large Bitcoin holder, so perhaps it's not a huge priority.
I feel the same way about Coinbase, James, so we can talk about that as well. I hate Coinbase, and I was right, and multiple people were wrong. Everybody thought that Coinbase was going to do really, really well because they have legal, regulation on their side in the US, and consistently I've been proven that they're just dog shit and are not doing well.
Have you ever been wrong on anything in the matter of cryptocurrency, Bach, or is it just like
no? This is just I don't like their vibe. I don't like their energy. Ryan, they hurt Ryan once, and I'm one of those employees that like really has to stick up for their superiors, and I think that's what really got me going. Ryan, do you want to talk about how Brian personally wronged you?
No.
Okay. Then
Bach, you were right. You know, as coin went from like $30 to like $300.
Yep, and that's why I buy it. I knew there was going to be a dip.
Vindicated.
I knew there was going to be a dip back down to whatever it is at now. That's why I didn't buy the move. I was right.
You're right.
What if it were Kraken IPOing?
I actually really like Kraken. I think Kraken's a really good experience. So I've had really good customer service experiences with Kraken. Like I actually once sent like this is years ago, like some stupid osmosis token to the wrong chain, and within like 24 hours, their customer service actually sent it back to me. Like they're actually quite good. I really enjoy them. I can't say good enough things about them. Sponsored post.
I mean, they're definitely next.
They seem, yeah, absolutely. I think just judging from things I've seen in Arkham, a lot of the older wallets also prefer to use Kraken, it seems, over Coinbase, which is a bit interesting. And volume-wise, they do about half of Coinbase's 24-hour volume.
That's not bad. And Ian, the point that you make on old wallets is interesting. I've heard that the Kraken team is like more crypto OG than the Coinbase team. They're like more aligned with the ethos. But they're also acting more flexible today, like around the Solana stuff. I think is pretty interesting. There seems to be like some pragmatism coming out of there, which is always good to see.
Yeah, I think you feel it in the product experience. Like as a user, there seems to be a lot of flexibility around, you know, how many different addresses you can generate and like where you can withdraw to or what you can do with certain types of assets. Their stance on self-custody and different things like that. I think they've kind of had that, maybe captured that OG user for some of those reasons, being, you know, maybe more crypto ethos aligned to some extent, at least in their product choices. I agree with you as well, Ryan. Like they're being maybe somewhat early to the trading equities on chain idea. We'll see when that launches. I think it's interesting. Like I would have expected somebody like Coinbase to be running down that avenue more quickly. So it's interesting to see Kraken maybe iterating a little more quickly than Coinbase is.
Yeah, I like Kraken. I think they're good. You can always trust them. Now they're gonna go under because they said that, but I trust them. Remember it was like 3 months where you weren't supposed to talk about centralized exchanges at all, and anytime anybody brought up like a sex, people were like, "Holy fuck, it's going under." That's why people brought it up.
Not your keys, not your crypto, Bach.
Yeah,
they might explode next week.
That's true. knock on wood. Danny, do you want to wrap it up? Ryan's clearly gotten bored and left.
Yeah, we're not intellectually interesting enough for Ryan Connor to continue. No, this has been good. I think
He's
we've been
tuning
going.
into the Ethereum stream over on Bankless.
If he was camera off listening to Bankless, I think I might end it all right now. You'd have to ship me a rope. All right, let's call it there. We've been going for a while. I think it was a good 2.5 hours today. Thanks for coming on today. Before we close out, actually, we did this last time too, Bach, real quick. Permissionless is coming up, I think, in 2.5 weeks, I want to say, June 24th through the 26th. You guys know the code is 0x10 for 10% off tickets to Permissionless 4 in Brooklyn, New York.
I'm only laughing because James.
How much do they cost now?
James is a loyal fan, and he paid a lot when we first began, and then we did a flash 50, and then James sent me 15 messages in a row calling me an idiot, like I make the decisions for the tickets.
We don't get to choose the ticket prices, but we do have 0x10, the code for 10% off. If you want to come out to Permissionless, we are going to have a dunk tank. A bunch of folks on this stream will be getting in the dunk tank. For all you Lions out there,
Including Ryan Connor.
Ryan Connor will get in the dunk tank. We will will it into existence. He doesn't think so. All right. Awesome. Thanks for coming on today, guys. James, Ian, and all the Blockworks folks, Bach, Ryan, Westy. Appreciate you guys coming on for the second live stream, 0xResearch live stream. We will be back again next week, of course, and the normal pods will roll as per usual. Until next time, we will see you then.
Thanks, Danny.
I don't know why it's showing that.
Great work, Boccaccio.
We're still live, bud.
Yeah, no, I wanted people to know.
Great work, Bob.
Thank you.